Hello, everyone. Good morning to you all, and welcome to this morning as we prepare for the second half of the week. And first of all, you must have noticed the sound quality of this session. It's a little bit off. I don't know what happened to my microphone this morning. It didn't application I'm using to live stream this morning. I don't know why it just came up all of a sudden, and I wasn't able to resolve that issue before the session. And not to delay the session, I just went ahead to go on with the backup mic, which is the one attached to my system. I just hope that I am audible and very audible as possible. So, of course, I would love to hear from you in the comment section if you can hear me loud and clear, and if we can go on with this particular setup. Okay, so if you can hear me loud and clear, please let me know in the comment section, and we'll be good to go. If you can hear me, please just say yes in the comment section, because if you don't say anything, I wouldn't know if we are all on the same page. All right, I know we have a handful of us in the house at the moment. Loud and clear, if we can go in this particular setup. Okay, so if you can hear me loud and clear, can you hear me? If you can hear me, please let me know in the comment section. Um, this is my backup microphone, and I'm not used to this one, so I don't know if we are all on the same page. So if you can hear me, just say yes in the comment, and let's move on. Okay. Okay, so without any response, I guess I don't know if you're hearing me or not. So I will just have to end the live stream and see if I can get my principal microphone to work and then probably come back later in the day. So without any response. I'm still walking around with the microphone. I The backup mic is still not picking up. So if you can hear me loud and clear, I really appreciate your comments. Send me a hi in the comment section so I know we are all on the same page before I can move ahead with the session. So I look forward to hearing from you, guys. And if this doesn't work, probably we'll have to reschedule the live stream, uh, pending the time I'm able to resolve the technical issue around my principal microphone. Okay. Okay. Oh, I just saw a comment now. Um, Marcel Gibson, thank you very much. So, if Marcel can hear me, I want to assume that everyone can hear me, right? And we're all on the same page. So, I guess let's go into the business, right? And let's so once again, you're welcome to today's session. In fact, we've got a big one ahead of us today. This is not just another midweek trading day. Of course, it's a decision day for us. The Federal Reserve is going to be making a decision today. Later today, we're going to be listening to the Fed chairman's speech, and whatever tone they strike will likely set the tone for the US dollar, and of course, other commodities and risk assets as we step into the final stretch of the month of October. And it's also important to understand the fact that we are also transitioning into the last few trading days of the month. And this is a period where there is this portfolio adjustment, profit taking, and position rebalancing, which tends to cause sudden moves in the market. So today we are not only going to be reacting to the first decision, we are also going to ensure that we position wisely for how the market wants to close the month. And with that said, let's run through the US dollar market and let's see what is going on here and how the market had played out since the beginning of the week. Now, what you see on my screen is the US dollar index, that is the DXY. And this was the structure we mapped out on this chart at the beginning of the week. So it was quite clear that in the last 5, 6 to 7 weeks, the dollar has been doing some sort of recovery. And during this evolution of price action, we saw how price evolved into um, an ascending trend line, giving us a sign that buyers are at the moment strong in this market. So the dollar has been consistently finding higher highs and higher lows. And you know how we use our ascending trend lines in this community. As long as price remains above them, we continue to look out for patterns and structures that support buying ideas. Now, at the beginning of this week, we acknowledged the fact that the market was going through a consolidation, isn't it? Last week, the momentum was quite bullish. We saw price move up into the $98.15 level during the first half of the week. And during the second half, we saw some sort of indecision as market went into a consolidation. And at the beginning of this week, I was mentioning here that this structure here will be telling us what is likely going to happen this week. First of all, we might likely see price break out the range bound to inside bullish expectations or break down the support line of the range to give us a bearish expectation. And this was exactly what happened during the first half of the week. Price broke down the support line as the market was pricing a nearly certain 25 basis point Fed cut at the end of this FOMC meeting that is coming up today. And that expectation was a dominant driver that pushed the dollar downward through Monday's trading session. Now, on Tuesday, we began to notice a choppy market scenario. Price was consolidated. In fact, we had some sporadic price movement yesterday around the US dollar. And I think this was the market reacting to the headlines about easing US China tensions and strong risk appetite. That is, stock was rising, and this encouraged a risk on mood in the market, and it sent traders out of safe haven asset like the dollar into equities and commodities. And the more market priced in Fed cuts, the easier it is for the US dollar to drop, right? But during the early hours of today, we begin to see that market was gradually getting out of this narrow situation, getting out of this mixing now. And if we also take into account the government, the US government shutdown, which creates a data blind spot, some official data are delayed or yet to be released, and in fact, the ones that are released may be unreliable. So players tightened positions and waited for the Fed statement rather than trade big during that period. Now, today the market is um, looking forward to the Fed decision, right? And some market participants are edging and rebalancing in the short-term positioning. And with the modest rise in Treasury bond yield, profit taking on earlier dollar shorts notched the US dollar to the upside this morning. And as a result, we can see price move back into that descending trend line we spotted at the beginning of the week, um, which makes us back into a crucial juncture ahead of the second half of the week. Now, this leaves me with two questions. Will this resistance line be a selling niche again that may likely push price to the downside, just like it has been doing since um, um, 9th of October. This is 9th of October here. We saw price drop from here on the 9th. We saw it happen here again on the 14th. And then we saw that happen again last week as price dropped from this $98.15 level. And right now, price is back into that area. So the question now is, will the momentum drop again from that point? Or are we going to see price break out of that structure to inside an uptrend scenario, especially when we consider the fact that price still remains above this line? Sorry, hold on a second, please. Okay, sorry for that break. So, considering the fact that we are still above that ascending trend line, it still gives the potential that buyer can still come into the market again. So we're really at a crucial juncture. We don't know if the momentum will break down the trend line, the ascending trend line, or will break out of that descending trend line for trend scenario. Now, today, if we look at the economic calendar, we have a bunch of high impactful event from the United States. Today is Wednesday, October 29th, right? And we have the Fed interest rate decision coming in by 6 p.m. UTC today. That's about 7 p.m. local time. That is for those of us in Nigeria. And then we also have the FOMC press conference, which is also coming up 30 minutes after that. So during the FOMC press conference, the Fed chairman is going to be answering questions from the media. And also, this will also be one event everyone in the market will be looking forward to, as you want to listen to his rhetorics, which will be giving an idea into what the monetary policy of the United States is going to be like in the nearest future. Now, if the Fed confirms a dovish path, that is planning to cut, and language is signaling more easing, we will be expecting the US dollar to resume a softer trend that favors commodity currencies and, of course, the gold as well. But if the Fed soft pedals future calls or signals caution because of the shutdown, the US shutdown and data blind spots, we want to be ready for a snap of the US dollar and the potential of price breaking out of that descending trend line to incite an uptrend continuation. So at the moment, market, I want to think that market have already priced in a Fed cut into what is going on now, which pressure the dollar early in the week as risk appetite returned. But with a government shutdown, clouding data, and the Fed minutes due this week, Fed interest rate due this week, we could see choppiness for a while before that event finally happens. So if you are trading the DXY, it is very important that you exercise patience and wait for some confirmation to happen around this area before jumping into a trade. And when I mean confirmation, we want to see price do either a breakdown retest of the structure lower time frame to consider selling, or a breakout retest of the descending trend line to confirm an uptrend scenario. So you would agree with me that we are at a crucial juncture, right? Now let's go into the asset monitoring for this week, and let's see the ripple effect of the sentiment from the US dollar. So the first asset we're going to be looking at today, of course, the US oil spot. And this was what we were looking at the beginning of the week. The market has been on a strong downtrend since, when was that? Since June, right? And we have this beautiful descending trend line to emphasize that downtrend scenario. Now, zooming into structure, I went on to confirm to us that price is back within a strong selling niche, right? That area between the $62.50 level and the $61 area, as we all see, as continues to push price to the downside. The last time price dropped was here on the 9th of October, right? And then when price came here last week, despite that strong bullish move we saw that buyers lost momentums, faced resistance from the sellers, and it appears that price is likely going to the downside. Okay, so now looking at this structure here, this sell momentum will continue, or will price break out of this structure? I want to attribute this bearish momentum we see here due to a larger than expected drop in US crude inventory. Okay, now due to this drop in US crude inventory, we saw that happened yesterday. Was it the API report, right? And we saw a massive drop in US crude oil inventory, and we all know what that means in the market. When there is a drop in inventory, it means that the demand in the market is high, right? And the supply wasn't able to feed the demand, so they had to go into the inventory to feed the demand in the market. So what this simply means is that demand is higher than supply. And from our simple economics, when demand is higher, what do you expect? Price is likely going to rise. Now, despite the week starting on a strong bearish note, as we see here, yesterday, prior to and after the API reports showing that the crude oil inventory dropped, we begin to notice that sellers were unable to break down that $60 barrier. And what happened here is quite interesting. We begin to see buyers resume from this particular area, showing that we may likely be seeing some sort of recovery. I'm not saying this will incite a really big bullish move, but it could be a recovery, maybe back into structure, that is the $61 level, the level that was broken on Monday, or even go to as far as the trend line, that supply niche, before it continues to the downside. And even if it breaks out, this will now further confirm the bullish trend. And if we look at the distance between where price is right now, hold on a second. If we look at the distance between where price action is right now, where's my ruler? Okay, from here to here, we have about 85 pips, and to this point, we have over 100 pips there. It's something that we would like to capture, right? We are within a support line, and when price got here, we begin to notice buy pressure resume from that area. I actually already have my buy position triggered. If you look at the bottom of your screen, you'll see that I have a buy position triggered already, which is running 30 pips or 35 pips approximately. And I guess this is one area you want to be looking to buy, at least for the meantime, maybe into the $61 area. That's about 100 pips the time the Fed interest rate decision happens. Okay. Now, we should also not forget that there are possible plans by OPEC Plus to raise, which could also limit further gains in this market. When they increase output, you know what that means. Supply may likely increase, and if supply overshadows demand, what happens? Oil prices may face some selling pressure as well. So we need to be very careful, not too over ambitious. If we are buying now, let's look at $61 area as TP target at the meantime. And depending on what happens around the 61, we can now start considering if we want to continue buying or selling. However, the upcoming EIA report, which is coming tomorrow, and the Fed interest rate decision, which is coming later today, will likely drive the next move. So overall, the buyers lean slightly bullish in the short term, but capped by supply concerns. Now, I do have a simple structure on the 15 minutes time frame, which revealed to me the current sentiment in this market, what this market is really telling us at this moment. So right here on the 15 minutes time frame, capturing the character of price action since Monday's trading session, obviously it's a downtrend, and this trend line here emphasizes that. But throughout yesterday, the market was consolidating. And you know what that means when the market is consolidating? It tells us that there is an indecision going on in the market, right? And whenever we have this kind of range-bound structure, we expect, we know that there's a negotiation going on between buyers and sellers. We are waiting for either the buyers to win or the sellers to win. And if buyers win, we are looking at a breakout retest of the recent line to continue the uptrend move. And if sellers win, we're looking at a breakdown retest of the support line to join, right? So personally, I joined the buy that you currently see on my screen right now, right here above the support line, due to the fact that in the last 24 hours, the market had consistently found buy pressure here. We saw it happen here. We saw it happen here. And then we saw it happen this morning. Though we had a breakdown of that support line, but it didn't last long as price climbed back up again with an engulfing bullish candle. So for me, it was a good support line to join an uptrend move. And as a result, I joined that move there. And I think it's high time I move my stop losses to secure the current buy position. So I'll just move my stop losses to break even at the moment. Hold on a second. Let me just move my stop loss to break even. Secure that position. Let's see how the market is going to be reacting to this trend line. Will it break it? Will it respect it? Time will tell. So for those of you who did not capture that bullish move and you're looking to buy the US oil spot, I would advise that you exercise some patience and let's wait for price to break out of both the trend line and the $60.30 level. Now, if a breakout happens, a breakout of the trend line happen, that will be the first time price will be breaking out that trend line this week. So if a breakout happens, we feel confident to join an uptrend. And if you are that cautious trader, you want to wait for confirmations like a retest of structure where sellers are unable to break down the trend line, and then that will give us a good opportunity to join the uptrend, and you can be looking at putting your TP at the $61 or $61 between the $61 and the $62.50 level, which is the selling niche we identified on the 1 hour, on the 4 hours time frame. Okay, so that is what we are going to be doing here. But if buyers find it difficult to break through, and it appears that market is leaning towards the idea that OPEC will be raising output in December, well, we'll be seeing continued selling pressure below this trend line. This could last for a day or two, but if we see signs of significant selling pressure, like multiple shooting star candles, reversal setups around that area, it could welcome selling ideas, where a further breakdown of the support line at the $59.75 level will welcome more selling ideas, right? So that is what we will be looking at here on the US crude oil. Let's see how the market will play out here. And for those of you who probably one way or the other had captured those bullish move, well, it's high time you move your stop loss, secure this current position, and let's see how the market will play out around the descending trend line. So that is my view here on the US crude oil. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking some 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. Right, so I guess we are all on the same page. I see your comments trading too. I'd love to invite you to partner with us as an affiliate if you. Okay, okay. Well, thanks for reaching out. Well, I would love to hear a bit more details about what kind of partnership you are talking about. Probably you can send me a mail and we can take it from there. My mail is right in the description box below. Okay, send me a mail and let's see how that can work out. All right. Okay. So in the absence of no questions, I want to assume that we are all on the same page, right? And with that said, let's move on to the next asset on our watch list. Stay tuned in. So the next asset we are looking at this morning is the GBPUSD, that is the pound sterling against the US dollar. And as at the beginning of the week, we were able to spot a range bound structure right here on the 1 hour time frame, that is our execution time frame, as price was initially confined, within the 1.3355 and the 1.33125, as you can see here, giving us a structure to plan our trades for the first half of the week. And you know how we use our range bound structures, right? It's quite simple. We wait for price to either break out of the resistance line to give us opportunity to buy, or break down the support line to give us an opportunity to sell. Unfortunately for me, I bought this GBPUSD at the beginning of the week. Of course, we saw price breakout during the after our live session on Monday. And for those who waited for a retest of structure, the market came back to retest. We saw price move all the way, moved about 30 pips in that direction before the bearish move came in. So yesterday, you know, I don't trade on Tuesdays. I don't trade on Tuesdays and Thursdays. So I definitely missed out on this bearish move that started 24 hours ago. So I missed out on it. And look at what happened. Price has been moving all the way downside, breaking down the 1.325 I shared with us in my weekend video. And price has moved currently over how many pips now? Over approximately 100 pips from there. Now, for those of us who were lucky enough to capture this bearish move, well done to you. For me, I wasn't able to do so, and I'm looking forward to see if the market will give me more opportunities to continue downtrend if it presents that, or get ready to move to the upside. Now, the pound sterling has been weak all week, right? The US dollar strengthens a little bit, especially of this Fed rate cut expectation. Now, while concerns grow over the coming tax-heavy budget and slowing economy, traders believe the Fed will lower rates in December, but uncertainty about the UK fiscal tightening is weighing on sentiment at the moment, and that's why we are seeing the pound sterling dropping significantly. So at the moment, expectations of possible future Bank of England rate cut also is pressuring the pound as well. So for me, I still strongly believe that the overall bias to the downside, the UK economy isn't doing very well, policy is in doubt, and the pound sterling definitely remains vulnerable. Now, how do we capture this continuation? Are we going to see price do a little bit of retracement back to retest structure before it continues a downtrend? Or will today's outcome of the Fed rate cut become a platform that the pound sterling can build upon? Now, to help me navigate the market today, this was a structure I was able to mark out on the 15 minutes time frame. So you know, when we get into the second half of the week, we streamline our execution time frame to the 15 minutes time frame. And on the 15 minutes time frame, this is what I was able to come up with. It's a descending trend, right? And I was able to capture a trend line which runs through the descending channel. So we can see for the first half of um, um, during the mid-month of October, we can see price was more or less trading below the trend line, right? And then we saw price break above the trend line last week, Friday. It maintained that momentum above the trend line for a while. Then it dropped back down again, respected it, came back up, and right now price has dropped below the trend line. So you can see how this trend line had played a significant role in determining how price action is moving. Now let's zoom into the current structure that I'm using to guide, especially from the fundamental factors we have dissected, says that it is bearish, right? But what we want to do now is to look for what path is it going to take. Now, it boils down to two things. for those who are looking to do a short-term trading opportunity, and for those who are looking at the market from a long-term perspective. So if you are looking at the market from a long-term perspective, you want to be looking for a sell. Personally, I have a sell position running already, which is currently in a loss. I think I took it right below this support line here at the 1.32125. So I took it right here. Price has taken me back up. And one, I still take succor in the fact that we have a shooting star candle right here after price moved back into the resistance line of that range. And you know what that means? Theoretically, it tells us that sellers are still present in this market. Okay, so from a long-term perspective, I still want to maintain my bearish bias. But if you're looking at things from a short-term move, well, price is back above the support line, an area which also has a memory for buying power. And you can see we have an engulfing bullish candle here that broke above that support line. And since the breakout happened, you can see that price had consistently found support right here, pushing price up. Trading from a short-term perspective, that is, if you're a scalper, a day trader who is just looking for some small pips to catch here, you can consider buying anywhere above the 1.3222. Let me give this a blue color or green color. Buy above this 1.322200 level, and your stop loss somewhere right below the structure. That's about I think about 5 pips. Okay, about 10 pips of stop loss, and then see how far this move is going to go. So if it goes up, it continues like this, you can have your TP somewhere around the trend line. That's about 1.333250. That's about 12-15 pips TP target. That is if you're a day trader, a scalper who is looking to capture that kind of move. Okay, but for me, I'm a long-term trader. I don't usually capture this kind of small moves. Instead, I want to wait for the big moves to happen. So for me, I already have a sell position running, and my stop loss will be right above the trend line. So if price can break out, retest that trend line, definitely I know that that bearish momentum may not likely continue anymore. So I still maintain a bearish bias here. And for those of you who are still willing to be part of this move, you can be looking to sell or place a sell stop order below this 1.32125 right here. Place a sell stop order below the structure, and of course have your stop losses above the trend line. This is a long-term trade, mind you. Above the trend line, that's about 20 pips of stop loss, and let's see how far that move is going to go. Okay, so if you're looking to sell like me, selling below the 1.32125 is making a lot of sense. But if you're a day trader, a scalper who is looking for short opportunities, buying above the 1.3222 and then putting your TP somewhere around the 1.32350 is looking sensible at this point in time. So that is my simple view on the GBPUSD going into the second half of the week. And of course, like I usually say, if anything new comes up, I will definitely inform us via my Telegram platform. So I do hope I made myself very clear. If you have any question, feel free to let me know in the comment section. I'll take another 5-10 seconds off. Let's see if there are any questions before we move on to the USDJPY. All right. So, in the absence of no questions, I want to assume that we are all on the same page. So, both some long-term and short-term traders, I do hope you've mapped out the structures accordingly, and let's allow the structure to guide the decision we are making going forward. Okay. So, next asset on my watch list for this week. So the next asset I'm looking at now is the USDJPY, right? And this was the structure we were talking about at the beginning of the week. Unfortunately for me, I wasn't able to capture this bearish move. This whole move started yesterday. So for me, I took a couple of losses at the beginning of the week, and I'm yet to recover from those losses due to this sporadic move in price. And for the fact that I don't trade on Tuesdays, most of the movement this week happened on Tuesday, surprisingly. And I really missed out on the opportunity to recoup the losses I incurred. Okay, so structure here. Remember what we said in my video on the USD JPY. I emphasized the fact that price is back within a strong supply niche right here. Okay, price is back within the supply niche. We saw what happened here on the 9th of October when price was here. It moved all the way down, right? And we saw the same thing. We saw signs of that kind of pattern happen here when price got into the 153.180 with continual rejection of that level. Now, buyers really did find it difficult to break out of that structure, giving us a beautiful signal ahead of this week. Now, during our live stream on Monday, I made mention of two things here. First of all, we have our key level at the 152.500, right? And I went on to tell you that the only condition that will make me sell is for this trend line to be breached and broken to the downside before I can consider selling. The fact that price action remained above the trend line for the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. For about 24 hours, the price was still above that ascending trend line. So I held on to my bullish bias, bought around this area, had my stop losses in place, and I was taken out, unfortunately, of that position. Now, the breakdown of the trend line happened in the midnight of Tuesday. So I wasn't around to see the breakdown retest of the structure. And besides that, I do not trade on Tuesdays. So I missed out completely on this opportunity. Now, for those of us who were able to capture this move, well done. Kudos to you. I do hope you moved your stop losses accordingly, secured some profit before the bullish buying pressure came in to maybe have taken you out of that position. And if you still have a position running well, I hope you've moved your stop losses to break even. Now, going into the second half of the week, it is quite clear that the yen gaining momentum as markets scale back bets on a near-term Bank of Japan interest rate hike. Now, the market is now expecting action in December instead of October. And another thing that I guess was also a supporting factor for the Japanese yen is the recent visit of the US president to Japan, where there was a very cordial relationship between the new prime minister and President Trump. And I guess she's in the good books of President Trump, which obviously will also give the Japanese economy some boost. And this improved US-Japan relations and cautious Bank of Japan guidance may keep traders alert for signs of tightening policy ahead. So technical signals point to a possible bearish reversal for the USDJPY based on this structure we are seeing on the chart. Remember, this is our key level for this week at the 152.5. We talked about this in my weekend video on the USDJPY, where I mentioned in that video that I will be looking out for a breakdown retest of the structure to even consider selling. Now, with what we see here, price has already broken down both the trend line and that key level. And right now, price is back into the structure, and we have noticed continued rejection of this particular area. Now, the question here is it time to sell? Is it time for us to sell at this point? We should still consider buying. Well, there is something I would love to share with you here. Though I personally have a buy position triggered on my USDJPY, and I will explain to you why I bought, despite the fact that price is rejecting the key level. Now, if you remember in my video on during the weekend on the USDJPY, I identified two trend lines. The primary trend line, which is a thick line you see here, right? And then we have the secondary trend line, which is the thin dotted line you see here. Now, at some point in time, price respected this trend line, right? As you can see, went all the way up, and then we saw what happened during the week. Price came back, retest the trend line, and we saw some bullish candles spring out from this particular area, which makes it look as if price has a tendency of continuing the uptrend move. So because of that, and the fact that price respected this trend line, how's your opinion that we may be seeing a reversal setup? Now, this is a technical understanding of the market. Fundamentally, it appears that with the recent US-Japan relationship, the Japanese yen will gain some momentum. But if we look at things from a technical standpoint, structure reveals to us the way the market is currently thinking. Okay? Now, as a result of this fact that price still remains above the trend line, I maintain a bullish bias. Now, if price goes ahead to break above the 152.5, retest it, I will be looking to add more buy to my position. Okay, and we will monitor how price will be reacting to the 153.180. I remember this is selling niche. We'll move our stop losses on all buy positions, secure some profit while we monitor how price reacts to the zone. Okay, so this is basically the reason why I am buying. And if we scale down into the 15-minute time frame, I do have this structure here that also gives me a perspective into how the market is currently thinking. Okay, so I didn't put my key level here. Let me put the key level so that key level is at 152.5, right? Somewhere right here. That's where the key level is. Okay, so let me zoom out so you can see price dropped here on Tuesday morning. That was yesterday. And then we saw an ascending trend line pickup after price found higher lows. Though we had a breakdown here, which turned out to be a fake one because price is up, and right now price remains above the trend line. Okay, so for me now, as long as price still remains above this trend line, we shall maintain that bullish bias. So if you're looking to buy, you can buy right now. Join me on this one and then have your stop losses somewhere below the trend line and the 152.00. We're looking at approximately pips of stop loss on this one. And if price action goes ahead to break out the key level, retest it, we look maximizing the potential of that bullish move. But if market continues to lean towards a favorable Japanese economy and the yen begin to gain traction, where will be the most appropriate area for us to sell? Well, to sell the USDJPY at this juncture, we definitely want to see price break down this ascending trend line. In fact, I would love to see a breakdown retest for confirmation's sake. And look at how beautifully that area also lines up with this 152 area, as you can see here. So I would like to see price break down, retest the structure, then I'll join the sell. But since prices still remains above the trend line, I maintain a bullish bias. Okay, my position has finally come back into profit, but just a small profit at the moment. Hopefully, it continues and breaks out of the structure. So by the time it breaks out, retest this resistant line and the key level at the 152.5-ish, I will move the stop loss of my first buy position to break even, right? And then um, join the move from that point. So that is how I'm looking at the USDJPY going into the second half of the week. We have a simple setup here, a range bound structure, and of course a key level that will reveal to us how the market is thinking. So this is my view on the USDJPY. I want you to, if you are following me on this one, you can mark out the structures as you have seen here on your chart and let it be your guide for today and tomorrow's trading session. So I do hope I made myself clear on the USDJPY. If you have any questions, feel free to let me know in the comment section. So I'll take another 5-10 seconds off. Let's see if there are any questions before we move on to final asset on our watch list. Stay tuned. All right. I guess we are good to go. And I wish us all the best of luck on the USDJPY. So let's move right into the final asset on our watch list for today. So the final asset I'm looking at for the week is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And to be sincere with you, I didn't trade the gold. I was looking very strongly bullish at the beginning of the week, and I did allow my emotions to decide um, what I was going to do. Remember the video I shared with us during the weekend? I was seeing price continuing the uptrend scenario based on the fact that the global sentiment in the market is in favor of the gold, the U.S. economy, the U.S. shutdown, Fed rate cut expectations, geopolitical tensions, all of which lines up with an expectation that the gold will continue to rise. And since price was trading above this ascending trend line at the beginning of the week, I lent strongly towards a bullish expectation. And if you remember, if you are with us during our live stream on Monday, I went on to explain that I will be looking to buy the breakout of this range that we saw here as price action consolidated exactly around that ascending trend line, giving me a very good signal that this could be that sweet spot we're looking to join that uptrend continuation, right? And though I saw the breakdown of the support line here on Monday, but I wasn't confident joining that bearish move. I was thinking it's going to turn out to be a false breakdown and then price will climb back up. I didn't follow my rule there. I should have taken the trade, but I missed out on this massive move to the downside. That's over 1,500 pips. But it's okay. The market does that. I know sometimes it's not all the moves we are open to take. Sometimes our psychological decisions may stand against us, which is quite understandable. I'm also growing in the market as well, and this kind of situation sometimes slips in, and all we just need to do is ensure that we don't allow it to get to us and make us deter from our approach. But for those of you who actually are taking it, who have stayed faithful with our analytical approach and took advantage of that opportunity, well done, kudos to you. I do hope you are able to gain some significant profit out of this one. Now, going into the second half of the week, we began to see something interesting happen in this market. As you will see, price dropped into the 3,890 area. And since price dropped there, we saw that sellers were finding it difficult to continue down as price action goes back into a recovery mode as it found higher highs and higher lows in the last 24 hours. Now, price is back into that crucial psychological level that I showed you in my video during the weekend. That is the $4,000 mark. And it appears price has broken out of the structure. Now, we don't know if this breakout is a true breakout or a fault breakout. So for me, I think this is the crucial juncture we are looking at. So one of the things from a technical standpoint is this. A breakout retest will definitely welcome more buying ideas, and if price drops below the structure and retest it, it will incite a massive sell-off. So at the moment, gold is above the $4,000 mark as traders anticipate Fed rate cut expectations, anticipate Fed rate cut. And when Fed cut interest rate, what happens? Gold will definitely rise. And this typically weakens the US dollar and boosts non-yielding asset like the gold commodity. However, easing US-China trade tensions and cautious market sentiment are keeping the gains limited at this point. So we really need to be very careful. In fact, the ongoing US political and geopolitical tensions, including the government shutdown, and of course, Russian sanctions, continue to support safe haven demand. So for me, the overall outlook is mildly bullish. I still want to go back to my bullish expectation at the beginning of the week, but I still think that in as much as it is looking bullish, it so look at the 15 minutes time frame here. So that is my key level. Sorry, that's my $4,000 mark, right? That psychological level we talked about in my recent video on the gold commodity. And as you can see, besides that key level at the $4,000 is the fact that price had transitioned into what I would call an ascending channel in the last 24 hours, right? Let me draw it out for you for visual clarity. So we have a low here, we have a higher low, sorry, higher high, higher low, higher high, higher low, and right now we are right here. And look at how, since price tested the $4,030 level, we've been noticing some resistance here, okay? And one thing about this resistance is that it also lines up with the resistance line of the ascending channel. So we may likely see price action come back into the trend line to start another wave of bullish momentum or break it to the downside to incite a sell-off. Okay, so let's zoom right into the structure. And if we look at the distance between here and here, we are talking about 170 pips. So what I will do right now, I want to risk a sell. So if you want to be part of this journey with me, I'm placing a sell right now. And now the market doesn't want me to take it. Okay, finally it does. Now I'll put a stop loss right above the structure. Okay, above the 4,026. So let's see what happens here. Now let me show you the resistance line I'm seeing here. So we have a resistance line here. As you can see, buyers are finding it difficult to break through. We have the 4,000. What's this area called? Okay, we have the $4,030 level. The $30, and then you'll see here we have another level here at the 4,020. I think I usually like to have it on psychological numbers. So we have the $4,020 area just right here. Okay, so let's just mark it out, 4020, and let's see. And price has broken down that structure. So we saw this whole scenario happen, range bound structure, consolidation. And when we identify consolidation like this, we want to see price either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Then another thing about this range bound is how interestingly it lines up with this resistant line of that ascending channel we spotted earlier. Okay, so we're at a crucial juncture. So at this moment, I have a sell triggered, and we could still see price come back to some retest to continue the move back here. So what I'm doing now is to place my TP around the $4,000 mark. Okay, we might likely see price come back to retest the structure. Like I told you earlier, we had price breakout of the $4,000 mark, and as we come back, retest the structure in an attempt to continue the uptrend move. Okay, so let me adjust this. Let me put it at 4,027 or 4,028. And I afford to risk about $20 on this one due to the volatility in the dollar markets and the uncharted territory we have. So I place above the 4,030. Okay, and let's see how this is going to go. So my stop loss is right above the 4,030. We could see something like this happen, choppy market scenario before the move goes to the downside, and we are capturing about how many pips now? We are looking at over 170 pips if market finally goes in that direction. So we are in a sell right now. Let's see how far this move is going to go. And I will say here that as soon as price moves about 50 pips in our favor, let's move stop loss 40, 50 pips. Let's move stop loss to break even, and let's wait to see if it's going to hit our TP target. And the other scenario here is if we get taken out of the sell, a break above the $4,030 area will buying opportunity. So it's the gold commodity. And then another thing I would like to say here, if we see a breakdown retest of the $4,000, I think I mentioned that earlier, it will welcome more selling ideas, and we could have our TP somewhere around the 3,980. So let's see how the market will play out here. I'm beginning to think of something here again. Can we just extend the TP to 3,985? That price might likely come back into the support line of this ascending channel, I think. So I'll increase my TP, 4,985 area, and if price gets into the $4,000 area, we move stop loss, we secure some 50 to 70 pips of profit while we monitor price action $4,000 level. So that is my simple view on the gold commodity for today's trading session. I hope I made myself very clear. If you have any question whatsoever, feel free to let me know in the comment section. I'll take another 4, 5, 10 seconds off before we go ahead and round off on today's Forex Money Mastery. Stay tuned in. All right, guys. I guess we have finally come to the end of today's Forex Money Mastery. So we are wrapping it up for today's session. If you have found this content helpful, independent trading decision, why not support the project by giving the video a thumbs up? And thank you very much as you do so. And for those who are joining me for the first time, I do hope you are able to gain one or two things from this session. If you did, I look forward to seeing more of you same time on Friday as we come here again to review how well these assets have done, and of course prepare ourselves for the second for the trading day of the week. Remember, the second half of this week can be very deceptive. Volatility spikes around the central bank decisions can shake out emotional traders. So it's important that we stay patient, stay centered, and don't confuse noise for opportunity. Let's allow the structures we have mapped out to guide the decisions we are making. All right. So before I close again, I want to call our attention to my Rebuilding the Trader Within series. If you are yet to watch them, please go and make sure you check it. It's right in the description box below. It's a reflective video built to help us strengthen not just our strategy, but our mindset and nervous system as a trader. So watch it and then let me know what you feel about each of the videos in the comment section of the video. And as always, trade smart, trade consciously, and then I will be updates and insights on the Telegram channel if anything new develops. Prior to and after you are connected there too. So I wish you a wonderful evening, everyone. Trade smart, trade consciously.